We are your last obstacle towards lunch, so I think it will be worth it, though, so please bear with us. First, thank you, Maureen Money. Thank you, Andrew. Thank you, Mike. Thank you, Mia, and Kevin, who I know is not here today. It's absolutely wonderful to be here and to connect with so many of you in Athens. Not in my wildest dreams, I thought that I would be stuck between the port of Piraeus, Acropolis, with my mum watching me in the crowd. So it's quite a special day for me. Thank you. And thank you to the wonderful panelists joining me today. We've got Hugues, please correct me if I'm wrong with the name. Calmet, I can do Greek names but not French, Hugues. And Simos, Spyrou, both wonderful, wonderful individuals that will speak about their respective experiences in the green sector, which is going to be what we will be talking about in the next half an hour or so. Today was a deliberate choice for me, not because obviously green is a very hot topic in shipping, not because only I think that it will continue to be a hot topic in the years to come, but because I think the finance angle is one that we don't necessarily bring and keep to the forefront when we discuss about green. We tend to focus a lot on the operational side of things, on decarbonization as a process and so on, but I think there's so much to be said on the finance side and in terms of what finance is doing or what it should be doing. And I think people like Hugues and Simos are absolutely the right people to give the insights of what they're doing, the projects, what they're seeing, and where they see this sphere and the whole market going. They will come to that in a minute. We have seen, of course, Poseidon becoming increasingly important, and we will come back to that in a minute as well. Of course, we've got Poseidon, but I think today is a little bit more about the principles. It's more about the fundamentals. It's more about discovering what is driving the ship finance market and where the ship finance market is going, where it should be going, and what is actually the motivator in doing so. Is it availability of capital? Is it availability of cheaper capital, potentially? Is it ethics? Is it ethics in shipping and ship finance that is driving it? So more of that to be discussed very shortly. Perhaps I can start with you, Hugues, actually. Tell us, what are you seeing? What is driving the agenda at DNB at the moment? What are you seeing on the green and sustainability side of things? What is exciting?
Maybe let me start by saying that I think we've seen a lot of capital available to the industry this year. Maybe more in the form of club deals, bilateral deals than large syndicated loans, but I think there's been plenty of capital available to our clients. If you look at the spread environment, I think it's a testimony that there is a lot of liquidity available to the market, and we haven't really seen the buying spread really catching up on this inflation environment. So we're very happy. I think our clients are doing the right things. It was mentioned earlier that preserving liquidity is high on the agenda of the client. That's very good. And we've received a lot of prepayment, from clients. So it's been a very good year. At DNB, we're part of the Poseidon Principle, and obviously it was announced recently that the group of banks would look to align their objectives with the Paris Agreement, which essentially means moving from a 50% reduction in carbon emission by 2050 to 100%. So it's a significant progress. I think it's a sign of a trend that continues to accelerate. The bank specifically is very focused on ESG, sustainability, and we will continue to deploy our capital where we see clients also, taking on the train of the energy transition.
Is this more on sustainability-linked projects, Hugues, or is it what we would call more green, pure green projects and platforms, you think? And is it changing, I suppose, is the key question for the future?
So, on the sustainability-linked loans, we've seen definitely an uptick in the market. More and more of these loans being done, not necessarily for just public companies, also private companies, through bilateral deals as well. So that has really picked up. Most of the KPIs tend to be focused on emission. So, when you consider, the social aspect, it hasn't really picked up that much. We've seen a few financings being done on the basis of, gender equality KPI, lost time injury, but not that many. So it focuses really on emission. Green financing for shipping, to be honest, I think it's a bit of a challenge. If you look at the EU taxonomy, unless you're looking at some coastal transportation projects, some ferries fully electrified, I think it's a bit challenging to expect green financing in shipping, but I think sustainable shipping financing is certainly available to the community.
Yeah, I mean, it is true on the legal side, that is what we say, but I think it's the nature of the business that we're in that makes the sort of pure green project being quite a challenge. Of course, Starbuck know really well about being innovative in this space and about challenges and how these are overcome, but I think what is really interesting for the audience is that you have always seemed to have done it in a very positive way, right from the very start, and in a very innovative way. How do you see that continuing, Simos?
So, thank you, Dora. Thank you to Marine Money for hosting this event. Indeed, Starbuck has so far been involved and has drawn 3 sustainability-linked financings with 3 different lenders, with a total amount exceeding 250 million. If we also take into account another facility that we drew in 2018 to finance the scrubbers with DNB, this brings the total amount to 320 million. I would say that, the element of green financing, green or sustainability-linked financing is on the rise. Significantly, both due to pressure to the banks from their investors, their shareholders, and from the regulators. I mean, more than 30 lenders, maritime lenders globally, are signatories of the Poseidon Principles. They control 185 billion of maritime debt. And you see that there is a clear path towards financing more the green and sustainable projects. Same is the situation with the green bonds. We've heard the previous the previous presentation from Luxembourg Stock Exchange. I was reading recently that in the Nordic markets, more than 20% of the bonds that have been lately issued are green. So there is a clear tendency that, both on the bank financing and the debt market, we are going to be seeing more and more the so-called green and sustainability-linked products.
I think that's true. I think there's only one way, and we've heard that time again and again this morning, in all contexts, actually. And I don't think the agenda has really stopped, despite all the other fundamental and very important things that are going on in the world. In terms of your target audience, Hugues, which I think is quite an important question, and I think is something that a lot of the audience want to hear about. Do you see this as an area where is actually the established, more major, more corporate players, customers of yours that can actually follow both, the regulatory challenges that there are, but also have the ability to respond in the right way and have the structures that they need, and the access, the ability to access the right capital? So, do you think that this opportunity, the green opportunity, is potentially more limited in terms of who it can be offered to?
I mean, when it comes to bank financing, I don't think there's any particular sort of profiles. I mean, we have our own requirements, but we're not the only, shop in town. There's a lot of different capital providers. So if you're looking for bank debt type of financing, I think whether you're a large public company or small privately owned, family-owned owner, I think you should be able to get access to sustainable financings. Now, if you are looking to raise, a bond, obviously, you need to comply with certain sort of requirements in terms of investors' expectation. Obviously, this year has been extremely quiet on the bond market because of the spreads being extremely high. So it doesn't make a lot of sense for clients to issue a bond in this environment. But we've seen last year and the year before a pickup also on the sustainability-linked bonds. Yeah.
Thank you. And Simo, what do you see from the side, obviously, of the owner that is very established in that area? I know that you have the initiatives in terms of the green platform that you have been very active on. Does this give opportunity to other players to come in? Does it also expand the opportunities for financing, actually, in terms of attracting capital that then finances bigger platforms, bigger products, more green products, if you like?
Well, there are a couple of issues here. In most industries, increased regulation is leading to consolidation. So we believe that the additional regulation, all this discussion on the green agenda, decarbonization, will eventually lead to larger platforms and consolidation in the market. So to your question, the answer is yes, we are seeing a clear trend that financiers are focusing more and more on bigger top-tier names for such projects. My main concern, and the second topic that I wanted to raise here, is just green financing enough to drive the decarbonization agenda in the shipping market? And the answer is clearly not. So we have a clear and I would say we have the lenders, the banks on our side supporting, but having just a reduced cost on your financing is not enough for owners to go ahead and continue with the investments that need to be done in order to conclude such projects.
Who do you think will bear the costs? We heard a lot earlier about, the kit almost financing itself. I think that a lot was mentioned earlier about kit that ended up being so beneficial because on the financing side, obviously, it paid out for itself. But how do you think that will be spread?
Well, clearly, the end consumer is going to take the cost. Nobody, doubts about that. And the issue is how much of this cost are the consumers ready to take in order to drive, to 50% reductions in carbon emissions by 250, or even go down to zero. The government at some stage needs to step up and support these projects. But again, even if you have the government supporting such projects, eventually the cost is going down to the end consumer. So the question is how much of this cost are consumers ready to absorb at this stage?
I know pricing obviously drives what the banks do. So the question is not whether it drives what they do, but how does it actually work and what kind of incentives can be offered even to the banks themselves actually to lead on the agenda. And I know you've got some really interesting news to share about new products that you guys are thinking at DNB, but I think those two are very much linked because I think there is a massive gap somewhere. And we need to start thinking about what's going to come in order to fill it up. So do you want to tell us a bit more about that?
Yeah, absolutely. Your first question about the benefit, the incentive, the cost reduction. This sustainability-linked financing offer 5 to 10 basis points reduction when the KPIs are met. Sometimes you need several KPIs to be met in order to get the 10 bips discount. It's not significant enough, I think, for our clients to say, okay, full speed on the capex side. So we realize that right now this is discount that comes from the bank's pocket in a way. This is not something that we can then take back to the capital markets and then enjoy a certain more competitive funding cost. On the green financing side, you can get a bit more appetite, but not necessarily transpiring into extremely more competitive financing cost. So I think because of that, there are limitations to what the banks can do. Now, I think in terms of the products, because shipping doesn't really qualify as a green industry as per the EU taxonomy, and the sustainability-linked loans are very far away from being able to drive the agenda and really push the decarbonization. There's a big gap, as you said. What we're thinking at DNB is to try to create a new product that would provide more incentive for financing projects which have a more meaningful impact. Now, what it means is we would expect probably a steeper decline in CO2 reduction, in exchange of providing this type of sort of new products. But I think clients have to look at it maybe in a slightly different way. The global need for capital is shifting towards more sustainable industries. The energy security has become very high on the agenda. We see an acceleration in investments in renewable energies. That's very capital intensive, extremely capital intensive. Those are new industry in many countries. Banks will be very keen to finance these projects. If banks' balance sheet grow enough to be able to continue to serve shipping and this renewable energy, then that's perfect. But it could be that it's not the case. And then banks will have to select where to allocate the capital. If the big commercial banks do not have the capital available anymore to deploy to shipping, which they don't deem to be as green as renewable energies, for example, then that cheap capital available may dry out, and I'm sure there will be other types of capital providers available to the industry, but not at the same price. So I'd say don't look at it as, can I get more than 10 bips reduction? Look at the risk aspect of it, and seeing your spread increasing to 4, 5, 6%, and even more in current inflation environment. That's I think the risk that you're running of not taking the train of decarbonization.
Yeah, and I assume what you're saying very elegantly is that there's a question about availability of capital overall, particularly in terms of certain players, particularly as the time goes and all of this process continues and becomes more sophisticated. Will even very good operators be able to access funds, or will it all become part of this sort of wider sustainable pot that is available only to the platforms that do the right things, really?
I mean, if you look at the size of the shipping portfolios within these very large banks, they represent just a fraction of the bank's activities, 0.5%, 0.5%, 0.1%. It's an easy decision to take for a board to say, we'll allocate our capital going forward to this industry. And the economic impact on the bank would be very limited if one bank decides to stop doing shipping. So there is that threat, which is difficult to measure because, we don't really know yet about the capital needs going forward from the different industries, but it's something to be conscious of, I think.
Great, thank you. And Simos, on the more sort of positive side, for companies like yours, where do you think the biggest opportunities lie in this area going forward? What is it? Is it going bigger, going more innovative, trying to consolidate and create platforms that attract more green financing?
I would say all of them.
All of the above?
All of them. We are focusing a lot. One of the main advantages of having being, a big platform is that you have the ability to take the cost to invest on R&D, and we're investing a lot on R&D around sustainability and decarbonization lately. And as we said before, we believe that all the additional regulation is going to lead eventually to further consolidation in the market. So there is another angle of opportunity here. Plus, what has been said earlier in the previous panels, all this uncertainty around the new technologies and where we are moving until we have an established technology assist a lot, not only the big platforms, every owner, by seeing right now the lowest order book that we have seen in the history. So people are really scared to place an order, to order a vessel right now that may be in 5, 10, 15 years from now obsolete.
Great, thank you. And I mean, I think we'll just do one last question. In terms of the speed, it was said earlier that because of geopolitics and the overall situation, it seems that perhaps the pace more recently has been not as quick as people would have hoped. And I think in that respect, there is quite a big gap between regulation and taxonomy, which is running, and what the market is actually seeing, both operationally and finance-wise. Do you think we will overcome that, and how? I mean, how can we bridge the gap, I suppose, is the question.
Well, it seems that Poseidon principles, the financing banks are, more aggressive, more ambitious than regulation. And I agree with you that, all recent geopolitical situation has put, on the back seat for a while, the green agendas, and, people are talking about, energy safety and reduced energy cost. But, eventually this, will not delay, the decarbonization and plans that we have for, and the roadmap that we have down to 2030 and 2050. The issue is not, the geopolitical problems, is how we are going to create a business case out of this and find a way to make such projects and such investments profitable for the owners. Because, as I said before, just a reduced cost of financing is not enough.
Thank you. And Hugues, anything from your side on that?
Yeah, maybe I'll just add to that. Then I think what we need also is sort of an harmonization of all these criteria, because I think for global industry like shipping, you guys need to be on the same level playing field, and we still don't have that.
Yeah, and I mean, we have seen on the chartering side that they have had the similar initiatives or equivalent initiatives, and that has been delayed as well. So there must be something that can bring all the strands together.
So the private sector is maybe moving ahead from the regulators, but we still need the regulators to make sure that they create the same level playing field to really see some progress. Yes.
Thank you. I think people will need lunch as much as we enjoy talking about green. Thank you.
I know it's a topic. Thank you guys so much, Dora.